here, and then we'll get this thing moving. Make sure everybody's on mute. We'll do some once again. We'll do some Q&A at the end. So if you want to stick around for the Q&A, make sure you stick around to the end. All right, guys. So thanks for tapping into another one. Brian Grimes, your real estate mentor. You guys should know where to find me by now. Monday night, 8:30 p.m. Eastern Standard Time. We're usually doing a mastermind call. The link's the same. You can also tap in on YouTube, and if you're not subscribed to the YouTube channel, make sure you like, comment, subscribe there. I'm going on a bit of a sprint on the YouTube channel, so we're going to be dropping a lot of content for you guys coming up, especially because I think it's a unique time right now to be doing this stuff, because we're looking at, the Fed is creating some incredible opportunities for us as investors. They're pretty much knocking out all the mom and pop buyers, and the only people that are left are us investors. So if you know what you're doing and you're tapping into this knowledge, you can get some once in a lifetime buying opportunities and put some cash flow in your pocket. So today we're going to jump into how to unlock Craigslist. And this is really so important if you've never gone to Craigslist for deals. And a lot of people, when they think of Craigslist, there's a lot of different stigmas out there. You think like, hey, there's some wild people on Craigslist, and that certainly is true. I've gotten burned by contractors that I've met off of Craigslist as well, like many people have. But there are some really good deals on Craigslist, and once you learn how to unlock these deals, your profitability will increase. What made me come up with this topic is Craigslist has kind of not been too profitable, I would say, for the last couple of years. Traditionally, when I was first getting started in real estate over a decade ago, you could go on Craigslist and just pull like a pennies on the dollar deal right off of Craigslist. You didn't need to know much of anything. And you didn't need to be good at market research either. You could actually leverage Craigslist for your market research. So you could just go on there, look at whatever deals were on there. There were always cheap deals. You could follow the zip codes from there, build relationships, and essentially get a foot in on any major city. It was one of the main ways how I got a foot in on Baltimore was through a wholesaler that I met on Craigslist. And that relationship ended up being really good. I got a pennies on the dollar deal. And that just kind of nested me in an area that was extremely profitable. So you can definitely use Craigslist to follow the money. But I'm going to demystify Craigslist for, those of us who haven't used it or haven't used it in a while, because the deal flow kind of dried up as we went into that COVID shutdown, and the supply and inventory has dried up. But now that it's coming back online, I'm starting to see the same type of incredible opportunities that I was accustomed to on Craigslist. They're kind of coming back. So you guys should be spending as much time on Craigslist if you're tapping into different markets as you are on the MLS, as you are on the auctions and some of these other free resources that are out there. So let's dive right into Craigslist. First, you want to start with the who's who with Craigslist. Who is on Craigslist, first of all, and why is it important? It's extremely important to master this before going to further steps, because if you don't know who you're dealing with, you're not going to be in a position to properly negotiate, right? So the who's who, you have a few different types of people on Craigslist. One, you have the DIYers, the people who are like, they want to do it themselves. And this is not just sellers, they're buyers. There are different service offerings. There are people posting jobs, but it's really for the person who is kind of like an entrepreneur and wants to do this thing themselves. They don't want to have as many people or hands in the pot. So you need to understand this marketplace first and foremost before trying to navigate it, because you're not dealing with the MLS. You're not dealing with a lot of realtors and brokers and these types of people. You're typically dealing with mom and pop consumers, or people who are, I'll call them like the penny wise. Penny wise people can often be pound foolish. That doesn't always mean they're pound foolish, but you're dealing with the penny wise. These are people who are very conscious of the fact that they're doing this to try to cut out middlemen. So there are less middlemen on Craigslist. So you're just going to find this group of people is going to be kind of along this line of thinking, of thought. That's their process. They're just like, cut out the middlemen, reduce the fees. I'm going to do this myself. I'm going to list it myself. I don't need a broker. And for an investor, that's good. Why is that good? Because real estate knowledge is it's asymmetrical. What that means for us is we can know substantially more than any seller. And if we know substantially more than any seller, we can take advantage of that knowledge. So the seller could come onto the market, maybe had never sold a deal before in their life, but they are a DIYer by nature. They think they can figure it out. They understand value. So they're just going to go out, list their deal on Craigslist, and do it themselves. And if you come in with more knowledge in terms of, what this property is worth, the value, the cost of construction, you can get a steal of a deal on Craigslist. There's also less competition looking on Craigslist because not everyone knows how to navigate it. It's not, I don't want to say it's not user friendly, because it's pretty basic, but it doesn't have the bells and whistles and the functionality of like Redfin, Zillow. There's no developer team behind it that is like aggressively making the design user friendly and having that pop and that flash and all these different search functions. The search functions that I'm seeing on Craigslist today are the same exact search functions that existed over a decade ago. Like there's not much money going into that design. So it's something that you need to just learn how to navigate and then move yourself forward. But understand these people are there. So where is the opportunity? Where's the value on Craigslist, and why are we here outside of the fact that, we have better knowledge than most of the people on Craigslist and we're cutting out middlemen along with them. We can negotiate hard. We have these different buckets. These are the different buckets that I look for and that I'm sorting for, because like I said, everything's there. Jobs, different trades, everybody's kind of on Craigslist trying to buy or sell something. So one, we have rental listings. So we have a ton of rental listings, and a lot of investors, they overlook the rental listings completely. Why? I honestly have no idea. But the rental listings are going to open us up to a few opportunities. You have to always tie it back to the who's who. Who's listing their property for rent? It's some person who actually owns this property. A lot of these people are just mom and pops who own the property. They're trying to list it for rent. They're Section 8 landlords. They're affordable housing landlords. They're low income landlords. So these properties, you'll see if you track this information and follow it, they'll be sitting on the market for month after month after month because they're not blasting these deals all the time to the MLS, to like Zillow, where everybody can see it. So you'll see a lot of these deals just sitting on the market. Sometimes there will be pictures taken by the owner, and you can look at the pictures and see this property is not really in good shape. Like this isn't like a top of the market deal. They're just trying to slap somebody in it, not put a bunch of money into the property, and get as much cash flow out as possible. And a lot of these landlords also are dealing with squatters. They're dealing with people who have torn up the house, and they're just trying to do as little as possible to make as much money as possible. This opens you up to being in a position to pitch lease purchase options, to pitch subject to opportunities, to some of these rental listings that are just sitting there. They're not getting a lot of traction. They're not a top of the market deal. These owners are burnout landlords, a lot of them. If they're trying to cut out fees on like just a tenant placement agent, most of them are very budget conscious. They're burnout. If you come along with a lease purchase option and say, hey, if I could create a win-win situation where I take this deal off your hands and you don't have to worry about being a landlord anymore and dealing with tenants anymore, would you be interested? Over half of them will be interested, especially when these deals are just sitting on the market. So you can go in and list build just off of the rental listings, opportunities for lease purchase options and subject to pitches. And people are putting their direct emails, they're putting their phone numbers, their cell phone numbers directly on Craigslist. So you can go and just get right in touch with people, cut out all the middleman, just grab the cell phones and shoot out texts every day. If that's all you did was build lists and blast out text every day, you would get directly in touch with some of these burnout landlords. And almost nobody's looking, right? So there's not even a ton of competition here. So this is one area that I will go to Craigslist for. I'll go for this particular bucket, and start to tap into this source. And this is a great source if you're trying to do the creative financing thing. Next, we have for sale by owner, the FSBO, right? So the for sale by owner, this is a lot of these DIYers, penny wise, pound foolish, people who want to cut out the middlemen. But the good part about them is a lot are unsophisticated. So once again, when you're dealing with a seller who is not like in the business of buying and selling houses necessarily, most Americans, I think they did the 2015. This was based off the 2015 tax return. 50% of rental properties were owned by Americans who own 2 or less properties, meaning they probably lived in one and then had one that they maybe moved out of at some point or inherited, and that was the rental property. Most of these properties that get listed on these sites, they're not from sophisticated sellers. Most of these people have never sold a house before in their life. So you can go in and lowball offer, you can offer hardcore, you can negotiate, you can do a lot of stuff and pull some of the best pricing off of Craigslist, unlike what you would be able to do through somebody on the MLS who has at least a realtor there to confirm value. So you want to target a lot of these for sale by owners. Not every deal that is listed on Craigslist is for sale by owner. You'll be able to tell the difference in going through the platform, going through the process. I break this down in a little bit more detail in the masterclass. For those of us who are in the masterclass, there is a breakout on this where we do like a screen share and a walkthrough. But you'll be able to find these people. The listings kind of look similar, and as you find them, you'll be able to put yourself in a position to get right in front of them, lowball offer, and get some pennies on the dollar deals. We're talking, 3-story, 3,000 square foot multifamily properties for $20,000-$30,000. You can find them on Craigslist in a number of areas. So next we have the wholesalers, right? And wholesalers are kind of flooded all over Craigslist. This is the number one way to build relationships with wholesalers outside of maybe like Facebook groups, if there are big Facebook real estate groups within the city that you're operating in. So if there are, you can tap in there and say, hey, is anybody a wholesaler? DM me, and a lot of people will reach out. But if you're not in that position, all you have to do is go on to Craigslist. Half of the deals are going to be listed by wholesalers, and there's going to be different types of wholesalers. There's astro flippers, there's small wholesalers and large wholesalers. And I just broke this out on my YouTube channel. You can watch how to get like deals. I just put up like a new deal flow video a week ago. So you can tap into that to learn kind of about the different types of wholesalers. But what we're looking for are the small wholesalers. I want small wholesalers because small wholesalers don't have big relationships, right? So I want somebody who's either small or newer. I don't want the big shop. There's some big shops running around in places like Philly or running around in places like Baltimore or Boston. And you don't really want to deal with those big wholesale shops because they have buyers lists that are in like the thousands, tens of thousands. Some are international. And in my opinion, they can be worse than the MLS even, because the MLS, if you have speed, you can operate very quickly and get deals before the competition does, especially if you have local resources. When you're dealing with wholesalers, they will build micro-targeted lists of cash buyers on an international level. So when they blast out a deal, that international list is so micro-targeted that you're dealing with only like sophisticated consumers, maybe some that have deeper pockets than you and different objectives. And that can create bidding wars and just put you in a bad position. So you want to deal with smaller wholesalers that are newer to the game. The newer ones are typically looking for relationships. They're going to bring you deals first before they hit the market, and that's just going to be more profitability for you. So always want smaller, newer people. And then next, package deals. You're going to see a lot of package deals on Craigslist, unlike what you would see on MLS. On MLS, you're typically seeing like a deal at a time, even if it's a multi. People are usually listing like one deal here, one deal there. On Craigslist, you're going to see a ton of packages. If you're a person who wants to get into buying and holding land, you're going to see a ton of land packages on Craigslist. You're going to see scattered site deals where somebody owns like 10 properties, but they're not all on the same block. They're kind of scattered around the city, but they want to liquidate all of them. And you can go in and make specific offers on their package, maybe buy the whole thing, maybe buy half of it, come back for half later. You can do creative financing deals on packages because the sellers are typically more motivated. If they're looking to sell their entire portfolio, they're typically pretty motivated. Something's happening there. They went with like a strategy, a low income housing strategy that's not working, or the cash flow is not there. They don't know how to evict. Their paperwork's not together. There's usually something going on behind the scenes if you ask enough questions about why somebody would be selling their entire portfolio. So you can get a lot of package deals, and package deals allow you to negotiate harder on pricing. It's just like anything else. If you buy in bulk, you go to Costco, you buy in bulk, you get discounts. It's the same thing with real estate. So whenever you're buying these packages, you're always going to negotiate in heavy discounts because there are less people there that will buy packages. And when you accompany that with leveraging hard money or some type of lending relationships, lenders like package deals. They like more properties because it can be safer if you've proven yourself on at least like one deal. It can be safer for a lender to lend to you on a package of deals because there's more collateral. If anything goes wrong, they have more real estate to come and collect on. So it's just a better position for the lenders as well. But this is, I wanted to go through this quickly so that you guys could get this and then open it up for Q&A. This is why I target Craigslist. These are the different types of buckets that I go to when I'm on Craigslist. Once again, this is a unique time to start getting into Craigslist if you're not into it yet or if you've never done it. Because from what I'm seeing right now, the market is starting to fill up with deals. We're getting to surplus territory where we're definitely back into a buyer's market. Like the seller's market is dead. It's a buyer's market pretty much everywhere in America. And as you shift into this buyer's market, you want to be positioning yourself with these different relationships, with wholesale relationships. You want to be positioning yourself within the marketplace to get your hands on pennies on the dollar deals. You don't want to be paying top of the market. You don't want to be anywhere near a bidding war. You want to go where there's less competition and more deals. And I'm starting to see that uptick hitting Craigslist from the wholesalers. So these wholesalers that were running light on deals, they have more deals. There's more for sale by owners there. There are more rental listings there. Everything is just upticking, and it creates the perfect conditions for cherry picking and lowball offers and negotiating hardcore. So make sure you guys are tapping into Craigslist. And once again, it's also a cheat code if you don't know how to do market research heavily. If you're not super into that, you can tap into Craigslist in almost any city. So you can just go on to Craigslist.com, click on the city, click on real estate, and look at what is being posted on the market. You'll see very expensive properties. You'll also see very cheap properties, and it'll start to reveal to you the zip codes that the cheap properties are in, that the deals are in. And as you continue to follow that model, you're going to be tapped into the right zip codes, the right opportunities. And if you introduce speed onto Craigslist, this is where I've seen the best deals. I've seen the absolute best, juiciest deals off of Craigslist. But Craigslist has been so dry for the last 2 years. I haven't talked about it much because there hasn't been much to talk about, quite frankly. But now there's a lot to talk about. So make sure you guys are tapped in. If you have questions about navigating it and you're not in our masterclass, in our VIP program, you can reach out, email, try to DM me. But everybody who's in the course, definitely shoot me texts and make sure you're getting yourself tapped into this stuff, because this is where you're going to see some incredible deals. So let's open it up for Q&A. I'm not sure if anybody has any questions about this stuff. If not, I won't keep us forever. But let's open it up for Q&A. Feel free to hop in the chat, or you can hop off of mute and just jump in with the question. So the question was, what's the best place this year to target properties that are going to be good for subject to? I mean, it's really That's really like a list building thing. When you're going hardcore subject to, I mean, you can certainly, like I said, go to Craigslist, deal with the listings that are just constantly there, like for longer than 30 days. Anything that sits on Craigslist for longer than 30 days, typically, definitely longer than 60, it's an opportunity because people are going to get desperate. And subject to it's going to be a number of things. One is going to be people who are in that real pressure situation of the pre-foreclosure, the foreclosure. Their property is going to be listed on a tax sale. They owe utility bills that are municipal. Those are going to come up on lists. You can list build those off of PropStream and some of the different websites that are available there. So those are always going to be an opportunity for sub two. But also when you see these listings that are just sitting there forever, those are going to be an opportunity to reach out and do the subject to like pitch. And that pitch is, hey, I see the property's been listed for a while. I work with people to help them to get their deals sold. If I was able to get you a price that you were looking for, would you give me the terms? And everybody's going to say, what does that mean? What are the terms? And the response is, great question. Let's talk about it. And the pitch is then, subject to, I'll get you the price, but I want to structure the deal in a way that makes sense for all of us, so that it's a win-win, and so that you can get out of this deal and we can move this thing quickly. So, that's what I would say is look to list build and blast text. And by the way, like, even though there are people who are like, well, Brian, I've been texting, and it just hasn't worked for me. You gotta pay attention to the market. Like if you were texting in March, well, it was a completely different market this March. You could do the same stuff and get way more deals because those moratoriums are over. The March was a seller's market still. Now we're in a complete buyer's market. These markets usually don't shift this quickly, but we're seeing some crazy stuff that's just being created by the Fed, and kind of it's all been created by the Fed. Even the market rising so fast was the Fed buying agency mortgage-backed securities. So and just propping up the market with quantitative easing. So the Fed has propped up the market, and now it's kind of destroying the market to a degree, right? So they're creating different opportunities. Now we're seeing that flood of deals hit the market. It's a buyer's market. There are going to be people who are in distress. We're going into the winter, and it's going to be a long winter for a lot of people. There are a lot of properties that you're going to see listed right now, and you're going to pop up in March, and you're going to see that same deal. It's going to go offline for maybe a month or so. Then somebody's going to get back like a report from the closing company showing them what the mortgage payment's going to be. Then they're going to back out of the deal. It's going to fall back on market in the middle of January. Nobody's going to go look at it. And then in March, it's still going to be sitting there. And they're going to be desperate. They're going to have a I need a deal stamp on their forehead. And if you come along with some creative financing strategies, there's a high probability that you'll be able to lock something up. So just keep looking, stay aggressive, keep list building, and get in front of people. Any other questions out there? Anything at all? I won't keep us long if we don't have a ton. Oh, thanks. Yeah, yeah. Mm-hmm. Mm-hmm. Yeah. What would I do with? Yeah. Would I still full gut that? Is that the question? Yeah. So the question is, would I still full gut a property that, for all intents and purposes, appears to just need cosmetics and maybe like refresh the roof and some of this type of stuff? And it's a good question. So we have to keep in mind the type of properties that I typically target and the areas that I target them in. I'm typically targeting C-class neighborhoods in major cities that were built primarily in the 1910s to 1920s. So everything I touch is usually 100 years old. And I've done enough full gut jobs to see what's behind the walls. So even if something looks reasonable to me from a surface level, I'm usually going to err on the side of caution and just gut it. I'm going to target properties that look extremely rough that most people would run from because I can negotiate harder, and then I'll have the budget within that deal to be able to do a gut job. And if I get into the gut job, to me, a gut job is not that much more aggressive from my perspective. It's just like, oh, I'm going to reframe it. I'm going to get everything perfect, especially if I'm going to hold it. And it's just to me, like a safer play. It's a safer bet in that sense. Now, if you're in different areas where the properties were built, like if I go somewhere in South Jersey and I'm in a township and that property was built in 1985, it doesn't need a full gut job. Even if it needed a partial rewire or new trim or new windows or a refreshed roof, or if it was built in 1965 even, the property can still have some life left to it. So, and if it's built on a slab versus having a basement, if the properties are generally just structurally sound, or it's a ranch house, or there are different types of properties that don't necessarily need an aggressive rehab. So I'm not just doing it to do it in that sense. I'm doing it because I've seen so much over the course of hundreds of renovations, like over 300 full gut jobs, that I just know what I'm dealing with in a lot of these major cities and these C-class neighborhoods that I'm frequenting. There's been like person after person after person who's never put the proper rehab in. They've just tried to, like, you might go into some properties, right, and they'll have like flooring down. And if you pull back that layer, there'll be another layer, and then another, and another. There's like 4 or 5 layers of flooring just stacked on top of each other. And the weight of that flooring is so much that it's just caving in the joists, essentially. And it's like, you could be that 6th person to come in and put a layer on top of that, which a lot of people would do. Or you can just come in and say it's all garbage, get it all out, and refresh it. And somebody has to do that at some point, especially over the course of, over 100 years. So it depends is the answer. If you're in a city, you should always look at the year the property was built, originally constructed. If it's 100 years and the property looks kind of rough, it's probably going to need a gut job. If it was built in the 60s, 70s, 80s, it's probably not going to need a gut job unless it was built horribly. So you just kind of keep an eye on it and do the right thing for the budget and also for the deal. But always overestimate your budget as best as possible. Always assume more of a worst case. And that's why I say full gutting by nature is safer, because you're always assuming more of a worst case. Now, things could still change. The cost of materials could increase. Labor prices could fluctuate because they're more liquid than we realize. Like, this isn't the 9 to 5. It's not like, oh, everybody gets paid this until next year when raises and bonuses come out. Labor can be extremely liquid. It's an open auction marketplace. So depends on what other people are paying, and that's what people are working for. So if somebody's paying $300 a day and you're paying $200 a day, some of your best contractors could get up and run and go for the money, unless there's loyalty or volume in place to keep them. So those are just the things you have to keep in mind. But I would say it depends. I think it depends. So the question was, in a C class neighborhood, do you buy and hold always, or do you buy and flip? I think it depends, because you can buy and flip in a C class neighborhood. How? You just sell to another investor. So you create a profitable cash flowing asset, because the C class has a better cap rate than the A class and the B class. You can always find an investor that's looking for cash flow and build that property, maybe section 8 it, and now it's essentially like a government bond to some people who are just sitting on tons of cash and want to park it. And you can take that deal and sell it to an investor, even in a C class neighborhood. You can also buy within the C class on the outskirts of the B class. So you'll be in like the C plus part of the neighborhood, which is like the nicest part of the C class. And you can sell right in that pocket, and you could still create a profit spread and profitability selling. Now, if your strategy is like most people typically, when they get into heavy renovation, they start to learn that if you do the burst strategy, you can, and you have like a spouse that's still working a 9 to 5, or even if you are, and you qualify, you can, from a tax perspective, you have to qualify and spend X amount of time in real estate. You can get massive tax losses. So there are people like, you could work all year there, and there are like highly paid people who work within real estate. Maybe let's say like they ran a mortgage brokerage. They might have like $500,000. If they go out at the end of the year, maybe they made $500,000 this year. If they go out at the end of the year and take $300K of the $500,000 they made, and they plop it into a $1.2 million 10-unit building, and they do all the bonus depreciation that they can come up with, and do like a cost segregation analysis on that property, they might get a $450,000 tax deduction against the $500,000 earned income. Now they only made $50K this year. In some instances, they're able to wipe out all of their income. And when you learn that, you don't really want to sell anything, because it becomes so profitable to just continue to make money, or have your spouse make money, and just invest in real estate for the tax losses, and then collect the cash flow on top of that, and not pay taxes. So, but you can flip in the C class. It becomes a question of, do you want to? And if you want to just buy and flip, you're going to do it more in like the C plus class, which would, when you're done with it, it's going to be that, now it's that cheaper deal that somebody who would just live in the B class, they're going to come into the C plus part of the neighborhood and buy there, because you're building a nicer product and it's cheaper for them to buy, and the taxes are usually a little bit lower. So you can flip to investors or people who are price sensitive, but you just have to know your numbers and execute. Any other questions out there? Yeah, that's a good question. The question was, is the information that I've gathered over the years about Craigslist, is it specific to the areas that I target, or is it across the board? To some degree, it's across the board. Now, different areas, there are going to be different things that you can find on Craigslist. Like if I'm targeting like the Poconos area or some rural areas, there might be like way more land deals there, but really good land deals on Craigslist, like unbelievable land deals. Still for sale by owner. The who's who is the same, no matter kind of where you're at. It's always the same who's who, and these same buckets that you'll be able to target. Still going to see package deals, wholesalers, SBOs, and rental listings. But the inventory will change. But what I found is that in buyers markets, Craigslist fills up with the juiciest deals, because nobody's looking. People don't think to go to Craigslist. They just think, I'll go to the auction, I'll go here, I'll go there. They don't understand how much happens on Craigslist. I'm telling you, I used to walk on Craigslist. Me and a buddy of mine, when we were first getting started off in real estate, and we're just like, this thing's a gold mine. Like, you could just go on any given day, know nothing, do no research, just scroll down. Oh, here goes a deal for 16K. Here goes a deal for 10K, right in Philly. Here goes a deal for 50K, right in a B class neighborhood. It's just like, the easiest thing. When it dried up, it was actually pretty shocking because I wasn't used to navigating without it. Which is why I had to get bulletproof on the MLS and really increase my speed and create those systems. So sometimes those hardships allow you to create new systems that are profitable. But no, you will find deals on Craigslist anywhere where there's a buyer's market. We'll say. So if you were in an even market, there are going to be some states and cities that are buyers markets, and then other states and cities that are sellers markets. Like San Francisco has been hot, just red hot because of big tech, right? So it's just red hot no matter what. Whereas another city, if you go to Pittsburgh during the same time that San Francisco is red hot, it might be a buyer's market in Pittsburgh. So as long as it's a buyer's market, it's really good. It's really good. So you want to learn it no matter where you're at. There's a few questions in the chat I'll read. What is your opinion on tax liens and tax deeds? Like investing in tax certs, I'm assuming is more of the question. It can be profitable. It's a longer term strategy, and you have to get into the weeds, right? Because what you're trying to do is tee yourself up to put yourself in a position where you can foreclose on a property. So you're buying the back taxes that somebody didn't pay. You're hoping that they would step up in some instances, you're hoping that they would step up and try to redeem that tax lien cert that you purchased. If they don't, in some municipalities, you have to do it like in subsequent years or you lose your position. So you might buy the tax cert in 2021, but then if you don't buy it again, say that person just doesn't pop up and 2022 rolls around, you have to buy the next one and the next one until you can properly foreclose on that property, which could be 2 or 3 years from the original cert that was purchased. So you have to be careful. You have to know what you're doing, what properties you're targeting. You also need to have a strategy. So what is your strategy? Is your strategy to target properties that are in shell condition that no one will redeem, and then you're just going to buy these low tax certs, and you're just going to pay the fees and whatever you have to pay, and then hand that off to an attorney to file the foreclosure paperwork so you can take over this property for pennies on the dollar? Is that your strategy? Or are you going to target properties that are in A-class neighborhoods or B-class where they're going to redeem? Because in that situation, you're just hoping to get that payment, get your money back, plus the 10 or 12% interest on the payment. So it just depends on what you're looking for and what your strategy is and what you're going for. Some people like to invest in that type of stuff because they say, well, it's better than the stock market. I can get a guaranteed 12 or 14% whenever somebody redeems, and I'm going to catch somebody slipping, basically forgot to pay their property taxes. I step in and they have to redeem from me. And that can be a good game, and a lot of people make money doing that. Foreclosing on properties, I know people who've created their own kind of auction houses off of doing that, off of just going out, bidding on tax certs, winning, and then waiting the 2 years, handing it off to the law firm, and then getting that property properly foreclosed on, and then they just auction it off to the highest bidder, and they have a pipeline of hundreds and hundreds of deals. So there are some really good business models that you can create there, definitely. So there's 101 ways to make money in real estate. It just depends on what your way is and why. Is doing that better than the BRRRR strategy, better than flipping? Depends on your goals, depends on your objectives here and what you want to do. If you want to be a landlord, if you don't, there's so many objectives, which is why you really, I'd say, from like my job when I'm mentoring people, it can be, I don't want to say difficult, but I try to approach it in a non-cookie cutter way, because everyone's goals are different. Everyone's objectives are different. There's 101 ways to make money in real estate. So you have to, one, learn many of these ways and kind of have a pretty hefty tool belt, and then choose the right path for yourself versus just do what everybody else is doing. They might be doing it for an alternate reason. Here's a question. Can you sell a property and buy another one next year for tax write-offs? I mean, you can. You'd have to do like, some of the some of the exchanges. So you can sell and then buy a property of a comparable value or greater, and then do a tax exchange into that property to kind of defer your taxation. So there's a lot of different sophisticated strategies that you can do for sure. Any other questions out there? The question, what course do you have where you're teaching these strategies a bit more in depth? Um, yeah, I have the 100 Keys Masterclass. This was a course that I built to take people on their journey from I went on from zero properties, kind of no experience, no deals, to doing over 300 full gut renovations in less than a decade. Most of that in less than 5 years. And I would say 90+% of that remotely, at least 2 states away. So that's 100 Keys Masterclass. It has all the content there. But I believe in more of like one-on-one mentorship for people. I think it's unique in the marketplace, and it's what people are missing. There's a lot of courses out there like cookie cutter um, information, and what people really need is like that one-on-one time where you can hop on Zoom with somebody who's done hundreds of deals and really talk through your goals, objectives, deals, strategies, and have somebody you can reach out to, like text and just go back and forth with as you're going through a deal. So that's kind of how I set up my my mentorship program, is to be able to spend time with people. I only take on a few people per month, and I'll post a link in the chat if anybody's interested in hopping on my calendar and talking one-on-one and learning more about how to tap in there. You can just click that link and tap in. Here's another question. What's my opinion on opportunity zones? Um, I mean, the funny part is with how I invest, I'm kind of always in and around opportunity zones. So I was just buying like in the C class, right? And then I started learning more about opportunity zones. So I just did like an analysis of my portfolio. And this was when I had like maybe like 150 properties. And almost 40%, I think 40 to 44% of the properties that I had at that time were in opportunity zones. Like they were in qualified areas. I think opportunity zones can be, really good from a tax advantage standpoint, bringing in capital, offsetting capital gains. I mean, there's nothing wrong with opportunity zones, but a lot of them fall in C-class neighborhoods. So you have to know how to operate within a C-class neighborhood to truly monetize, opportunity zones correctly. So it's like you can create a tax incentive for anything, but if somebody doesn't know how to properly monetize that incentive, it's like worthless. So there are very few people I found that know the ins and outs of a C class neighborhood and how to monetize it and how to make it work at a high level. If you really understand C class neighborhoods, you wouldn't want to invest anywhere else because you couldn't find that level of profitability anywhere else. The cap rates are better. There is a risk premium associated with that, but there are ways to mitigate the risk. And that's what nobody focuses on. They just talk about, oh, well, there's a risk in C class. Okay, why don't we focus on how to mitigate the risk, how to limit the risk? If you focus on that, you will solve out the problems. And then once you solve out enough problems, it just becomes more profitable. It doesn't become more risky and more profitable. It just becomes more profitable. Um, so, that's just something. It's just something that people have to do as they're getting into opportunity zones. So just know opportunity zone is synonymous with C class investing. So, everything I teach could show anybody how to monetize an opportunity zone, but I think you have to go into that eyes wide open and understand where people make mistakes and the pitfalls and how you can avoid that stuff. Another question popped up in the chat, and I did post that link to my Calendly in the chat, theworkwithgrimes.com. So anybody who wants to hop on the calendar, just click that link and you'll get tapped in. So the next question was, how do you figure out your comp? I break this down in the 100 Keys Masterclass. So I break it down in my VIP mentorship course. It's the reason I can't like give everything here or even a ton is because I literally spend like, I think there are 3 or 4 1 hour sessions on how to think like an appraiser, how to run comps like a pro, um, the box that appraisers have to live in, like really breaking this thing down because it's deep. It's not as simple. I think you can watch a lot of like YouTube content and they're just like, oh, you just find a like to like. You find a 3 bedroom, 1 bath, and you're doing a 3 bedroom, 1 bath, and they're both 1,200 square feet, and it'll be fine. And there is some of that, but there are a lot of wrinkles. When you get into reality, everything's kind of different. Everything it kind of changes, and your understanding of comps at an intimate level allows you to displace value. It allows you to unlock value. Like for instance, I know that I can buy if I get a big enough 2 bed, 1 bath, I can put a third bed somewhere within that property, and I can get the comp of a 3 bed, 1 bath as long as I have the right square footage. Like I can do it. And because I know that, like for a fact, because I've done it before, I can out invest somebody else who might be shakier with that knowledge or just not quite understand how it works or what an appraiser has to do or doesn't have to do if they get in a deal and are trying to make an assessment. There's also a way to work with an appraiser to kind of nudge them in the right direction of valuation. I usually, if I'm meeting with a new appraiser, I'm usually walking that property with them and kind of in their ear, talking about it, seeing who they are, where they're from, and what they think about value. Because all appraisers aren't created equally. There are forward thinking appraisers who always are looking at where prices will be in the future. And then there are today appraisers who are like, this is where it's at today. I know this. And they're very strict on numbers and they're very close to home plate, I'll call it. Like they run their appraisals and they're like, this is what these sold for within 2 blocks. And then there are other appraisers that'll pull a comp from almost a mile or more away, even though they're not supposed to go more than a square mile. They'll pull it from like almost a mile. So you start to understand how that game works. But that's like a heavy breakdown. But I think it's a good question, and I spend so much time on it because once you understand value, you understand the whole game. Once you unlock value and you understand how appraisers think, you become smarter than even the banks. Even the banks don't really know how appraisers think. That's why they hired them. That's why they hire an appraiser. If they had the knowledge that I had, they wouldn't really need an appraiser. The appraiser would be there to confirm value for them. But they're not there to confirm value for these lenders. They're actually there to educate them on to what the value of this particular property is. And the lenders don't even think to like create a map of all the appraisals that they've gotten in a year and kind of save that data and get smarter internally. You think they would do stuff like that, but they don't. They just care about did the deal check out? Did the numbers make sense? Can we stamp this and get paid, basically. But if they understood it as well as I would, they wouldn't even rely on appraisers as much. So definitely something you want to be in too. I have some videos on the YouTube channel about appraisals and running comps and stuff like that. So you can definitely tap into that. But if you're in the master class, like that's something where you can really dive into kind of all of my hundreds of deals. You figure if I've done over 300 deals, I'm usually doing an appraisal on the way in and out of the deal. So with the hard money and with the refinance, so that's over 600 appraisals. So I've dealt with a lot of appraisal reports, and that's just within my company, and I've done some other stuff outside of that too. So there's just a lot of appraisal knowledge floating around. Curious to know more about the correct paperwork for subject to. How do you find and use the correct legal documents for a transaction? That is available in the course. What you'll find is I've essentially built this course, this mentorship program to give you access to kind of everything. Creative financing, subject to, lease purchase options. We talk about tax lien investing. We've done breakout sessions on that. Valuation, buy and flip, buy and hold, being your own, we'll call it like landlord. So doing your own property management, hiring property management, uh, tenanting, evicting, zoning, conversions, kind of all of the fun stuff. How do you navigate this stuff? Because I've had to go through all of it over the duration of time. Subject to contract is very, for whatever reason, very hard to find that information. Like it was something that, I was looking for at a time, and it's very hard to find out there. I actually have a full contract walkthrough in the course where I have a subject to contract. You can download it from the course, and we do a full like 40-minute walkthrough, item by item on the contract and how to fill it out and what it means. So we actually take you through that breakthrough of a subject to contract. And whenever you're dealing with creative financing, my best advice to anyone is you always want to engage a real estate attorney. Why? Because I can give you the contract, we can go through the breakdowns, but a lot of this stuff is really a question of what a judge will do, and that is very local. That is local to the municipality. So you might have a great boilerplate contract, but then there was one wrinkle because this court case came out 2 years ago and a judge made a ruling, and it's a new ruling. But judges, what people don't understand about judges is in many ways they can create the law at this level. Like they create it. So if they rule on something, and it doesn't get appealed, or it goes to the appellate level and they verify it, they confirm it, or they overturn it and create or define some new area of the law that where this case hasn't existed before, that can completely change what needs to go into these contracts. So you want to engage a local real estate attorney that is very comfortable with creative financing contracts. And when you do that, you're going to put yourself in the best position to have the best contract that is going to work directly within the area that you're operating. And it's very important. You don't want to skip that step. You don't want to just take a contract from anyone and try to do this, because you don't want to lose a good deal. You don't want to get in some type of stupid lawsuit with somebody. It's just a waste of time. You just want to get your contract right, get it bulletproof, and then go out and execute. So that's my best advice. But we do have that in the VIP mentorship program and the coursework, and we do like a full walkthrough. And I did that and put it in there because I couldn't find it. Anything I can't find anywhere, or I think that people want to know, I'll just add it into the course. It wasn't a part of the course a year ago, but I'm always adding things to the content to reinforce the course and make it so that people don't have to go anywhere to get more knowledge, because I think that's a waste. Okay, I'm not sure if anyone else has any other questions. We're bumping up on about an hour. I'm gonna post the link to my calendar again in the chat if anybody wants to tap in, and hop on the calendar, talk one-on-one about getting yourself started in real estate. Everybody's got to get started right now, though. Like in real estate, you don't have to start with me. You don't have to join my mentorship program, right? It's here for you. It's open, but you got to get into real estate because there's so much going on right now. The opportunities that are going to be here next year and the year after. This is like the ultimate reality TV. You don't need to watch the Kardashians. You don't need to watch social media. You don't need any drama. If you just tap into this real estate, there's so much moving and shaking, so many opportunities that are going to open up. And the Fed's going to probably reverse their stance and start quantitative easing again in some way, shape, or form. And it's going to create unique opportunities. You want to just be super tapped in right now, more than you've ever been in real estate. In terms of being tapped in, you want to be super locked in right now, like right now. And you're going, because the wave is coming. The foreclosure wave is coming. The eviction wave. My goodness. Like go type in wave of evictions into Google. You're going to see like some cities where they're like, yo, evictions are up 500%. It's going crazy right now. And you need to be tapped in so that you know where the deals are and you're well positioned. You're in striking distance. One of the best things I heard on social media today is, if you think you won't qualify for a deal, don't think you won't qualify. Go to the bank and let them tell you you don't qualify. and let them give you a list of reasons why you don't qualify, and then go fix those reasons, and then come back. I got laughed out of the bank my first time walking in. I didn't even have a credit score good enough for FHA. But I fixed it immediately. Fixed it in 20 days. Right back. You know, that's what we have to do. We have to have that mindset right now to be ready so that when the deal comes, we can strike. Any final questions out there before we run? Going once, going twice. So look, guys, I appreciate you guys for tapping in. Once again, you know, this is that Monday night, 8:30 p.m. Eastern Standard Time spiel. So definitely, you guys know where to find me. You know how to tap in. Definitely tap into the course. If you're watching this on YouTube, click the link in the description if you want to tap into the free training that I have for you guys. And you know, stay focused because this game is changing so fast. It's even hard for me to keep up with this game. So stay tapped in, stay locked in. Brian Grimes, real estate mentor, tapping out for the night. Appreciate you guys. All right.